What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this Saturday evening. So what we're going to be going over in this video is evidence that a very small portion of AMC shorts may have covered over the last week. Now, if you guys remember from my previous video last night, we talked about the Ortex data and how a lot of people were blowing this out of proportion, where it looked like a lot of shares were being returned, and some people were speculating that shorts actually did start to cover in a big way last Wednesday after those massive price run-ups. But I kind of disproved a lot of those claims, and I explained to you guys exactly how the hedge funds are going to start manipulating our data. Now, we also have short selling being stopped again at more institutions. As I said in my previous videos about this, I think that this is just the beginning. Once we see more and more institutions start to not allow short selling of AMC and the selling of naked options, it's going to be very difficult for these institutions that want to short AMC to get shares, which is going to maybe lower the manipulation in the share price that we have seen over the last week. Now, this is probably some of the biggest news that we have received over this weekend. Robinhood has actually received a cease and desist letter from the SEC over their payment for order flow revenue structure. So this is huge news that we really need to cover in this video. So make sure you guys stick until the end so you're caught up with everything going on with AMC. And if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And the more people that we can get educated on the facts of what is going on with AMC, the stronger our community becomes. And in addition to this, if you guys would like to earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. So coming over here, we can see that from eHor, we have AMC Short Interest is about 4.53 billion according to his models, 88.2 million shares shorted, and we can see that the shares shorted is down about 1.4 million shares. So this is a very small amount of covering. If you guys want to see a brief model and a calculation of the math on what price floor that we could actually get to when you don't actually account for any of the synthetics, make sure you go check out Kringle Kitten's Twitter page. He's got a very nice calculation over there that I think you guys would like to see. But 1.4 million shares may have been covered. That is nothing compared to the amount of naked shares that are out on the market. We are still in the driver's seat and we are still preparing for the mother of all short squeezes. Now, let's get into some of these different institutions actually halting shorts on AMC. Now, this was what we covered in a couple of my previous videos. So this is the start of what happened. So Raymond James blocking AMC shorts. So meanwhile, Jefferies is said to be blocking short sales of AMC, GameStop, and Microvision. Raymond James has also banned shorting of AMC and has also blocked buying the theater chain on margin, a person familiar with the matter told Seeking Alpha. Now, what we were speculating in my last analysis of this is that this was just the beginning. A lot of these different institutions know exactly what is happening with AMC at the current time, and they know the potential of the different ramifications that this is going to have on their business if we get up to the price levels that we all think we can. So we are going to continuously see these different institutions start to not allow shorting. Now, we do have a couple of more institutions to talk about. We can see that Goldman Sachs, Bank of America, Citigroup, and Jefferies Financial Group are among firms that have adjusted their risk controls at prime brokerage operations. Now, something to differentiate from is that some of these brokerages, these prime brokerages, are actually going to be cutting off the short selling directly to retail, meaning that retail investors cannot short AMC. But Goldman Sachs, Bank of America, and Citigroup seem to be over on the institutional side, meaning that institutions and hedge funds that want to short AMC no longer have the ability to do so. The banks are trying to protect themselves against fallout from extreme surges and dips that have characterized trading in companies including AMC, Microvision, and GameStop. So here's really what they're trying to avoid. So everybody knows what happened with Archegos a couple of months ago. Now, I believe that Archegos was not the only different fund or institution that was engaging in these total return swaps and getting unbelievable amounts of leverage from companies like we see listed above, Goldman Sachs, Bank of America, and Citigroup. They are not the only one. The amount of risk that these different institutions and insurance companies actually are bearing at the current time is astronomical. I'm thinking at the current time that the insurance companies are looking at this situation and are basically saying, if you guys don't stop what you are doing, we are not going to basically validate and pay out on your policies. This is getting out of control and we need to put an end to it. This is showing us that we are very close, in my opinion, to a very interesting black swan event coming. And I believe that that event is going to be the AMC and GameStop short squeezes. Now, here's another thing that we definitely need to talk about. So this is from the SEC, and this is dated June 4th, 2021. So this came out yesterday. So here is what I want to take a look at. On December 17th, 2020, the commission issued an order instituting administrative and cease and desist proceedings pursuant to Section 8A of the Securities Act of 1933 and Section 15B of the Securities Exchange Act of 1934, making findings and imposing remedial sanctions and a cease and desist order against Robinhood Financial LLC, as we can see right here. In the order, the commission found that Robinhood launched its retail brokerage business in 2015, and by mid-2018, it was one of the largest retail broker dealers in the United States. One of Robinhood's primary selling points was that it did not charge customers trading commissions. In reality, however, commission-free trading at Robinhood came with a catch. Robinhood's customers received inferior execution prices compared to what they would have received from Robinhood's competitors. For larger value orders, this price differential exceeded the amount of commissions that Robinhood's competitors would have charged. So let's say that another brokerage is trading $1 for a certain trade. At Robinhood, they were actually receiving more than this and charging their customers in terms of the difference in the actual fill price, more than that amount, and we're raking in more money. These inferior prices were caused in large part by unusually high fees Robinhood charged the principal trading firms to which it routed its customer orders. Now, who do you think that they were routing their orders to? Citadel. For the opportunity to obtain Robinhood's customer order flow. These fees are generally referred to as payment for order flow. Now, the whole payment for order flow structure actually allows for a version of naked shorting. And the fact that we have seen a lot of volume in different on different days on a lot of these different exchanges, but the price does not go up and the inflows are massively outweighing the outflows, suggests that when these orders go through, they are not actually being routed to the exchange, creating a synthetic or naked share that the market maker is holding. So this plays into what I have been saying before, where the hedge funds that are short AMC are buying those synthetic shares or the naked share that the market maker is holding to make it look like they are closing out their short position when in reality they are not. So here's a metaphor that I want to really get across to you guys. So imagine there is a fire in the room. So what does a fire need in order to keep going or growing larger? Oxygen. What is going on right now with the SEC giving Robinhood this cease and desist order, we are seeing a lot of these different institutions no longer allowing the shorting and the selling of naked options on stocks like AMC, Microvision, and GameStop. What we are doing as retail investors by just buying and holding shares of AMC is essentially sucking the oxygen out of the room that the fire is in, and it is slowly dwindling down to a very small fire, but eventually we are going to put that fire out, and that signifies the MOAS, the mother of all short squeezes that could potentially be coming in the near future. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.